Okay, so today we're looking at the typical sort of conversations that we'll have internally with the risk desk between myself and Alex Bannon. Alex Bannon, who looks after the risk and trading strategies within PES, as well as implementing technology. So turning market fundamentals into actionable strategy. So, Alex, why don't you take us through just a quick summary of what's happened in the last few days and what the outlook is going to look like up until the weekend?
Yeah, absolutely. Cheers, Alex. So really, we've seen a big drop down over the past few days with positive progress in the Middle East to resolve the conflict and increase and resume flows through the Strait of Hormuz. So you can see on the market charting there, we've seen a significant and pronounced drop down in the market price. So a good way to monitor the likely size and sustainability of this market movement is through technical analysis. So it's various statistical measures of the market, one of which a key one is RSI. So you can see how much that value has dropped down in this charting here. And where we're at the lower end of that range, more towards the 30 line, that indicates that there's not a huge amount more that the market can drop down. So really, we're likely to see the price kind of hover around this level. This week, the market will really be focusing on whether that peace deal gets signed on Friday. So expecting quite sideways price action until then, and then it will all really unfold on Friday and into Monday with the rest of the price action depending on the actual outcome.
I suppose it's like everything in modern day is sort of waiting to see what happens with that Iran deal and when they release the detail on that. So what would you say, given the technicals we're looking at, what would you say the more medium term is on sort of more of a market overview?
So in terms of medium term, obviously the market has reacted really positively to the news over the past few days. But the fact of the matter is there's still the infrastructure damage and the long lead times in terms of resuming the production and the gas flows. So generally, we're not expecting to come back down to the levels that we were seeing earlier this year. So this is, we could have a bit of a new normal for a little while. But really it will depend on the rate of resumption of the gas flows, which then also feeds through into the electricity market as well.
So looking at this, we're really heading more on the bearish side than the bullish. You can see that electricity is more neutral, whole curve is bearish, gas is obviously more bearish. Just on that, I guess, quick summary, why is electricity in the neutral zone, gas in the bearish?
Yeah, so generally we see electricity doesn't move as quickly as the gas market does. So generally in the generation mix, we see around 30 to 40% on average of the electricity generation comes from gas. So when we see bearishness and equally bullishness in the gas market, that then has a bit more of a muted impact on the electricity market. So generally, the volatility and the reactiveness of the electricity market isn't as quick as the gas market. So some of these indicators are a bit more pronounced on the gas side compared to the electricity. So, but see more of that bearish influence on the gas. But if we do see a bit more of a downtrend coming on the gas side, that will then eventually feed through into the electricity as well.
Perfect. Okay, look, appreciate that, Alex. So, as always, if you'd like to take that step bit deeper into your energy price risk and look that little bit further into detail, then please feel free to get in touch with anyone at Professional Energy Services, where we can marry a technological provision to really to contextualize your energy risk management.